Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Wednesday, January 2nd, 2018. Just want to start off by wishing everybody a happy and healthy and prosperous new year. And as we get into the charts here, I just want to do a quick update. This won't go over a lot. This is more so a follow-up to Friday's video. So we're looking at the same potential price targets that I was looking at then. We have on NQ, I'll start out here with the futures. NQ 60-minute chart looking at first two resistance levels likely come into play, and this would be my preferred swing target here, about 65, 53, 54, somewhere in there, with the minor resistance here around 64.70. So what's happened since Friday? Well, we did go on to break down below these rising wedge patterns. I'm referring to these nice, clean, almost textbook looking bearish rising wedge patterns. And you guys, if you follow me for a long time, you know I love shorting. I love being bearish when it's time to be bearish. So this is usually my type of pattern. But as I laid out in Friday's video, what I'm expecting, and we'll see. It's still early, way too early to see if that's the case, but I was expecting maybe a false breakdown here. In other words, we had what looks like a textbook breakdown. It was impulsive, everything you want to see. It broke down last night in the over hours trading session. And if it does play out, then you would expect something like this, especially now. I know a lot of people are clamoring for new lows, so by all means, this would be the perfect catalyst. You couldn't ask for anything better, after a strong relief rally, bear market rally that started on the 26th. So we all see what we want to see, and maybe that will prove to be the case. But as I maintain, I was almost expecting a breakdown of that. It was such a perfect looking bear flag. You had divergences. And the question is, will this prove to be a bear trap or the real deal? So I posted some charts on the right side of the chart this morning before the market opened, showing you that's where we were right about there. And I said I still maintain that that would be an objective long entry. It was a little before about 20 minutes or so, I guess, before the market opened. Long entry with a stop about 1% or below, and you could do the same on QQQ. Buy the Qs at the open or in pre-market, stop about 1% or so. And what that does is your downside's minimal. So if you're stopped out, you lose 1%. And if I'm correct here, what we're going to see, and I think we're seeing the early start of it, a bear trap. And to me, nothing is more beautiful than a bull trap or a bear trap. In this case, a bear trap, because when you break down from a wedge, a lot of people pile in short, and when you start to see the buyers step in, and the more we go up, the more you'll have these shorts squeezed. Right now, we're almost to the breakdown point. Once we get above there, really the level to watch today is this the recent high right here. We have I can draw a line right there. It comes in. So there's a resistance level around 6,400, and I know these are the futures. I'll get to QQQ in a second, but this paints a picture that QQQ does not show us. That's why I like to watch the futures, often trade the futures, even if I'm trading QQQ at times in certain accounts, or whether using TQQQ or SQQQ in an IRA account where you can't short futures. I'll still watch the futures because it gives you what I like to call X-ray vision. You're seeing around the clock trades that you don't get to see on QQQ. So there it is. So far, like I said, you can look at this glass half empty or glass half full. It's your choice. You can say this is a breakdown. Nothing goes down forever. Maybe the first kickback rally with more downside to come. I happen to think this is most likely a bear trap, and so I maintain that a stop, a short, I'm sorry, a long here. Excuse me. It's been a long week. The long entry here with a stop not too far below seems objective, and I think if that we continue to run up, we have the potential for a very powerful short squeeze. So I'm still looking for pretty big gains. We had our Christmas rally started the day after Christmas, and so far we continue to see what looks to me like a bullish chart. Now remember, we were down quite a bit in the futures. I think they were down over 2% today. So if we recover this, that's going to be, again, very powerful stuff. It will show me that 9:30, the opening bell, that's when the big boys come in, the institutions. They're trading in big blocks. They're trading much more actively during regular session trading hours. So if they buy up this dip, it tells me again that the forced selling pressure, the redemptions from mutual funds and ETFs, that is likely over at this point in time. So I think we can see a continued upside here. And again, these are near-term targets, and I shared what I think will happen if and when we get there. I shared that in Friday's video. So let's just look at a few more things. Let's look at ES. Yes, similar. And I didn't make mention, I did on the post on the front page today on right side of the chart. And that was a public post, by the way, those charts. There was what looked to be like a bear flag pattern as well. So that was additional food for the bears this morning in the futures. We were flagging right there. There's your flagpole, and it was even more prominent in NQ. So that's what a bear would have expected on a break of that bear flag. But so far, we've seen those flags foiled. Now the day is young. The markets are still red, so anything can happen. But again, that's my thoughts here. It's again that I think this breakdown will probably prove to be a bear trap, and if so, that would be quite powerful, especially on ES. You can see this a similar level. We just need to pop above these recent highs right here, and here, and there's also reactions back there. So that's the big level to watch, and I think if we get break through there, you'll see probably a pretty powerful impulsive move up there. So, I continue to be in the buy the dips mode right now. I think that's what works until it stops working. And again, keep your stops tight because the market is still in a very precarious technical posture when you look out, at the daily and weekly charts. Okay, and now as promised, here's QQQ 60-minute chart. There's that trend line. You can see the comparable trend line, as what we were looking at on NQ. You can even try to wedge it out here, but again, you see more trades on NQ. But this is a trend line that I was watching. So that broke, and again, broke down with a gap down this morning, which I believe to be a bear trap. False breakdown. And also, as I mentioned, I believe on Friday, we had a downtrend line right here that comes in as well. So, again, we all see what we want to see. Here's what, if you're bearish and looking to break, short a breakdown of the trend line, you probably didn't notice this trend line. And if you're bullish, you look for this trend line and you say, well, this is an objective long entry in a pulp. We had a breakout. Here, let me turn this one back on for you. And so if you're looking at the market right now, glass half full, then you say, okay, this was a breakout of a downtrend line and breakout, back test, and now we buy on a back test. There's two levels you buy if you're looking to go long. You buy on a breakout of resistance, which is above the trend line, and or you wait to position long or add to that position on a pullback to support, which again is a trend line. Just as shorts will look to break a break of support, which was this uptrend line. So right now we're wedged. Here it is. As I'm doing the video, it's anybody's game right now. So you can say it this way. If you're bearish, well, we broke down today from the trend line on the gap, and now we're coming back up for a back test, so I can short again here. And that's what you do if you think the market's going down much further, and especially if you think it's going to new lows. Again, it's pretty objective, and you can go over that same level I just showed you a minute ago on NQ, that resistance level that we need to pop to really run. Same thing here. It's about 155.5 or 155.50 or so on QQQ. So a short, or a bear can short here with a stop not too far above. And like I said, longs, I think the pullback this morning, the gap down, as I mentioned, I think was an objective area to go long. You also see a pending bearish crossover on the PPO that looks pretty bearish. And a lot of people will, use that alone as a sell signal. Sometimes they stick, sometimes they don't. Here's where the PPO was making a bearish cross, but it kissed or just briefly crossed below, and then you had one more pop up. So anything's possible. Like I said, I'm showing you both sides, and I think I've made it clear which way I think we're going here. One other factor too, and I may have mentioned on the site today in the comment section under that first post, is I have to wonder, always try to put myself in the mind of the masses, which is very difficult because sometimes I just don't get. I don't get who was buying in the market leading up to the, September, October highs. Who would have bought Apple and Facebook and all that with the extreme overvaluations, the divergence, all the red flags that were flashing. But again, as a whole, I try to look at the masses, and what I'm getting at here is I'm thinking, okay, after the big walloping the market had last quarter, I have to ask myself, who didn't already sell at this point? who didn't sell up until December 26? Which longs, those that owned Apple and Amazon and Facebook and you name it, and QQQ and SPY, who didn't capitulate or hasn't yet that didn't do so by before that big rally with that huge reversal on December 26th, and everything has been, the market action's been very bullish since. So my question is this: you have tax loss selling, which is good up until December 31st. If you have losses on any positions, that's when you need to sell them to offset gains for the calendar year 2018. So that's so it just makes me wonder, and I'm trying to think through the supply dynamics of this market. I think if those that didn't sell and didn't capitulate on the 24th or before the 24th, why would they do it on the 26th or the 27th or up to the 31st? Maybe there are always people that want to that are still trapped longs, we call them, and they want to short a bounce. But also couple that in with tax loss selling. You could have sold back anytime in December. You wait 30 days, so you don't pass the wash rule where you have to wait 30 days to buy something back in order to not have that loss washed out. So anyways, that's just sort of a supply dynamic thought process I have going on. So I do think I still maintain I think we'll see a pretty nice rally coming up here in January. And if the charts prove me wrong, I may be singing a different tune tomorrow, next week. You guys know me, and that tends to really blow the minds of some people. I notice on, especially on the YouTube channel, how I can flip from bullish to bearish on a dime because, like I say, the charts are dynamic and so is my analysis. And if I see something that convinces me otherwise, I will change my tune. But as of now, this looks like a buy the pullbacks, buy the dip kind of market, at least until we get up here. And we get to these targets, we'll see how things look, and then we'll go from there. So that's SPY. I already showed you QQQ. These are the, this is my preferred swing target here on SPY, 262.23, and that's still, again, there's work to be done. We'll see what happens today, especially if we pop above those levels I showed you a minute ago on the futures and on QQQ. But we're talking about another maybe 6% upside from here. And if we get it, it'll probably happen relatively quick, is my guess. And relatively quick means maybe within the next 2 weeks, 2 to 3 weeks probably. Could be even shorter if it happens. And then this isn't as well defined as the futures. I had a level there for you a minute ago. Let me put a line right here. See, we have a couple reaction highs here in SPY. I'd have to correlate that, but let's just say around 250. And certainly a pop over those recent reaction highs. That would most likely do the trick. What I mean by that, those that shorted this gap down or have been shorting or shorted the divergences that were laid out on those 60-minute charts of the futures, expecting the breakdown, they'll be squeezed out at that point. A lot of those will most likely have to cover. And those that went long on this pullback today, like myself and some others on the site, if we go much below today's lows, that's not a good sign. This is where the bulls stepped in so far today. You can see it on a 1-minute chart. They bought it up pretty aggressively. There's a little pullback going on right now. So like I said, I think still, at this point, give it about a 1% or so stop below today's lows. Maybe 1.5% on QQQ because the futures were down a little bit below that pre-market. And I think the risk reward is good. Was going to cover crude oil and some other things as I did in the members only video on Friday earlier in the day, but I'll just keep this one. Let's wrap it up here. Keep it only on the broad markets, general market analysis, and I'll get this out on the YouTube channel for everyone to see. This has been Randy Finney with Right Side of the Chart. Again, best of luck on your trades in 2019.